So what we hang on. Okay. So now if we look at here, as you know, like this is an inside monthly bar. So it's just a matter of like where we gonna end the year. But if we have my price target from here on small caps is 272. Okay, that is a one that which is a 127 extension. I don't know how long it's gonna take. I don't have any time limit anyways, but looking at this as a 3-year high with a double top is just a matter of like if we correct lower, okay, but we will eventually make an attempt right to take out this high. It will be, it will get taken out. It just when, I don't know that when. I cannot give you that answer. I don't know that. But I can assure you one thing that indexes don't tops out with a double top or triple tops, and we talked about this thing many many times. It's gonna get taken out. It makes it a little difficult to to play it with options because you have time because you limit on those time now. So shares are good. I mean, if IWM gets bid one more push here, I'm gonna pick up some leaps for next year from here. See if we can add some leaps here. I like this zone. This looks pretty interesting. Um, so this was small caps. What I was gonna show you this rotation. That's I think I put it yesterday as well. Where the heck it went? Here, you see right there, Russell 2000 growth, value, and here's your value. You see how they're all going toward the lagging quadrant? And we just looked at those swings, and it shows exactly the same thing. If look at this mega growth, and we just looked at them, how the swing is up, right? You see how RRG confirms these swings? You have to trade what you see, not what you think. Sorry. This is what you have to keep in mind. And I'll show you everything, what you like to see. This is what is moving, what is not moving. I can see everything. I don't need to go and look at 10 different people's posts and what that guy is showing and the other guy is showing. That's just nonsense to me, to be honest. I have everything here. I don't need any anything else to tell me which direction the market is going and which sector is going where. I can see everything. The weakness that we're looking at, we just looked at it, right? It's it's this thing has been confirmed by that. So if if we're ending the year like this, okay, so there is a very good chance that this rotation is going to get improved for sure. Okay, we need to start looking into some of these names that we could write back up. Okay, this is an R. You can Google this thing as well. This is an RRG. RRG stands for relative rotation graph. Okay. The relative rotation graph, you have a main benchmark. Our main benchmark is what? S&P 500. Okay. Here's your benchmark right there. So this is your benchmark at 100, and this one goes across like this, 200. That's your scale, right? So now this one has direct night. Now RRG has four quadrants. This is the four quadrants are you have a leading, weakening, lagging, improving. So the securities or any stocks in ETFs, they all it's like call it like a galaxy of like it's like a universe of stocks, like they just rotates around the benchmark. Okay. So the rotation only goes clockwork like this. So they're circling around the benchmark. It never moves this way because this is where the rotation goes, and it has north, south, west, and east. So you're looking for an RRG that relative rotation graph. This is what is showing you. Now this graph right there, it has a lot of other things beside momentum and alpha that what you're looking for. You're looking for what is this? You have momentum right there, ratio, angle, distance, heading, velocity, quadrant, so you have a little banner right there. So it has everything in there. So it has all these ratios as you can see. So there's a lot more goes into it. You don't just, oh, this thing is going down. Okay, I should. No, you should wait a little bit because you need to wait for for this momentum to pick back, to start picking up. If you're trading a stock, what do you want? What are you looking for? Two things: momentum and alpha. How do you get the alpha? You get the alpha when the stock is further away from the benchmark. If the stock will be further away from the center point, it's going to make a much bigger rotation because it has the distance that which is it is pretty far away from the main benchmark. A closer the stock is going to be close to the benchmark right there. If the stock sit in here, is going to make a much smaller move. If the stock comes like this from here down here, and then it's starting to move back like this, it's going to make a much smaller move to the upside. Now, if you have a stock that just moved from here, comes because it's going to sell off pretty hard as well because now the price is pushing lower, and that's where the momentum is. So the momentum one is starting to improve, which it will because it has to go clockwork again. This is where you need to find something and see if that fits with your technicals. That's when your Elliott wave count is going to come into a play. Either you are in a fourth wave, either you are in a second wave, or whatever you are. Then you have to find entries now. You know, so the rotation graph helps to give you the the hint like okay how the stock is doing relative based on the benchmark because stocks they outperform the benchmark, some they underperform they underperform the benchmark, right? You hear them all the time. Oh, this stock is this and this stock is doing this. The if you don't want to do this, the other way you can look at it as a ratio chart. The ratio chart will tell you exactly the same thing. Basically, you can look at the relative strength based on compared with the benchmark. So you can go to your if you do a if you do a ratio chart, where's my ratio chart? Right there. So the ratio chart right there is basically you take a price of a stock divided by an S&P 500. They call it relative index comparison. So if you don't have the RRG, which a lot of guys don't have it, you can use this one. Ratio charts are really good charts, but most people don't use them, you know? This is a relative index comparison of S&P 500. I use a 20 period exponential moving average on it. So this so basically what it is that you take that AMD price, okay, which is 126.91, and you divide it by S&P 500. It gives you a ratio. The ratio right now is 0.0221, right? So when you go here, as you can see, this is your 20 EMA right there, the red line, right? And now the stock price is down here. So meaning what? The stock, you see the slope right there is telling you what? It's basically telling you this, the stock is underperforming the main benchmark, right? So the price is right there. So when the good time to buy the upside on a stock is based on compared to the benchmark is when the price starting to close above the 20 EMA, like something like this. You see, you got the bigger then you have the move to the upside. Well, then you just have to do your projections to see what your upside, what are you looking for? What will be your potential targets and things like this. So that's when your technicals comes into a play. But this one gives you a relative, like the ratio based on how the stock is performing around the benchmark. So all the stocks are the same way as well. Here's Nvidia right there. You see, starting it's showing a bit of a weakness right there. You see, it came back. It's fighting this area because there's Nvidia has this area right there has a lot of supply sitting right there. I've been talking about this 140 area over and over, like how many times the prices just keep coming back over and over again is around this zone right there. It is this area is to this. It's just you see right there, but you don't see anywhere else. All here. So just Nvidia just not moving anywhere because Nvidia right now it has God who knows, call it like double trip, double tops or whatever. But it's just sideways. This is a distribution phase. Stock had a massive run to the upside, and now it's just from the last 6 months, the stock is just not doing anything. It doesn't it doesn't have this directional look, right? If you take this high and look at all these highs right there, and there's your triple bottom here, it's just sideways. So, which is normal. You have accumulation. Now you have a distribution phase. Okay, so can Nvidia come back down a little bit more here? It's totally possible. I mean, can that's the bet I would make. So I laid it out here as you probably saw it yesterday, right there. Um, Here's your June high of 140, right? Got a massive, huge consolidation here. But I put them into a triangle. Triangle, I mean, nailed it almost to the day when it was completed. It was on October 2nd, right? This 50% retracement with that time projection. And then right from there, this is a 1 hour, there's 2 hours right there. The same thing. I just from here, the video took off. I mean, from here, once you have the triangulation right there, you actually complete a five-way move to the upside because triangulation only happens in the fourth wave of a trend. It cannot be in a second wave, right? So, I mean, we can make a case here as this the only way you can count this thing has to be a diagonal. I have it as a leading die because you can't do a 1, 2, 3 count because you're where you gonna count this thing. You can put one here, two here, then you have this huge fourth wave. I mean, it's just gonna look weird. This is fine. You have bigger one, shorter three, got an overlap here with five. This is good. But having a triangle that goes from June until October, and then from here you taken out this high, which is right there, then you reject it, then you push right back up to 150, then come back to 137, then like from here you can clearly see the price is starting to make higher highs, higher lows, right? Here's your higher high, higher low, higher high, higher low, higher high. So this is good. It fits right with the wave one and with the overall price because you're trying to take out this high right there. And you did many times, but you keep coming right back down as well at the same time. But then here you have this decline, right? But you have to watch this area that what the stock price is doing right now. Here's your 140, okay? And then here you have 131, which is this high right there. Okay. Now, why these two area right there is it's where you're gonna have a lot of people gonna keep, buyers will stop coming back in. One is you have your initial decline here. That's one. Then the price rallied. Okay. So you made a low here, right? Then you made a lower high. Then you're trying to make a lower low, but it didn't happen. This is where you have the rejection right there. This is where you have the second decline. So you take this one and these two. Now your area is this and this. This is exactly what I drew this, as you can see, this entire box right there. Okay. So what do you see here ever since now? Now look at this price action. You see? Because it's fighting this 140, 130 zone, and it will. It's in a distribution phase. NVIDIA right now, it is in a 10-point range. As we can see it, down, up, come back down, up. It just keep bouncing around here in this entire zone. So now the point is, what do we make out of this? If we have a 5 waves up, okay, we need 3 down. So diagonals, remember we talked about this, diagonals always going to come back down. The retracement for the second wave is always going to be a prior fourth wave, and it's going to be a second wave. This is where diagonal starts from the second wave. So they're very well defined targets if you can spot a diagonal. Either it's going to be a leading diagonal, it's going to be an ending diagonal. Ending diagonals and leading diagonals, they always form from wave two. Okay? So there is a very big chance that the price after making a 5 wave, because it's considered as a motive wave, it's because it has a 5 wave, it has 5 waves. Diagonals cannot be a 3 waves. So you have a 5 waves here, and then what the price comes right back here to the prior fourth wave. It came right back here toward the second wave. This is exactly where the diagonal started. There you go. Look at this low here, and then boom, right there. Got a big pop. And now it came right back to this 130, 132 zone here as well. So it dropped. There's a lot of support sitting here as well. So you have a 5 up. For now, I have as a counter as a 1, as an ABC, some sort of a C. Could be a WXY. God, who knows? You don't want to kill yourself over these corrections. They're very subjective. Either or, it really doesn't matter. What matter is where we could find a potential support. Okay. Our support is where 38.2 at 137, 50% retracement is at 132. So the stop loss basically for this is from here. We just taken this low of 115 to 152, which is the all-time high. Now we're gonna have to find where we could find a potential zone. I can clearly see, take this low and you connect the all-time high with this high right there. You can see it's starting to form a wedge. Okay, this is the bullish wedge. Now it's a matter of like, unless um a try like if this is on a much bigger time scale, that is going to be a much bigger triangle, that's a totally different case. But there's no way to say it that would be the case, because it's too early to call for this for this massive huge triangle. But I don't see a stock that this is a pretty high beta stock. A stock can consolidate for that long and don't resume the upside. It will resume the upside. That's how I see it. You know, I mean, yeah, I mean, Nvidia has a massive run. It just looks like the the run that Nvidia made for the first 6 months, and then just the first half of the year, and now the other half of the year is just going sideways. I mean, a sideways price action with especially trading with options is very challenging. That just buying shares and just starting off at the shares, and then you can look for something that resume back to the upside. Then you can throw a couple options there. That's different. But positioning something with for this kind of price action gets a little bit challenging because the time is running, and we need to move, and we're not moving. We're just getting tortured. The bottom line is that, does the chart does this looks bearish? Absolutely not. There's nothing bearish about it. But what we can look for now is if at a 5 up, take this as an A. Here's your B, some sort of a C. The C is this is the support that I'm watching, which is this low right there. The previous low, almost close to around to this 50% retracement. Yeah, 131, 133, 132 area right there to this low. If NVIDIA manage to break down, it will come right toward this area right there, which is we have 128, which is 127 extension. And then this would be the measured move of this decline projected from a B, give you equal distance at 126.33 right there. So it'll be around the 126 area. So now that area right there, that would be right toward here. There is a lot of support sitting here. A lot. I did put a time projections on it. So we already met 38.2 right there. That's your price, that's your time. 50% retracement has met as well. The price retracement, not the time. The time would be around like December 18th. And then the 61.8, which is this one, and goes up to December 26th, a day after Christmas. So there is some time to chew here, okay, with price and time. Once it will complete, it, I mean, that's the bet that I'm willing to make. I mean, if I manage to scale a couple points or whatever the case is, I mean, right now I have a position open is down, which well, what can we do? I mean, I'm just, I'm not just not gonna throw more. I have time. I'm just not going to throw more money into it because we're just going like this. Um, just give a few more days and see what NVIDIA does and see if it can manage to, but it need to get out of this this area. That's all. So just gotta wait. That's the only thing I can say at the moment. Okay. Um, IWM, this Tesla. Um, as I said yesterday, I did a revision because I had this fourth wave sitting here as a running flat. And after the close yesterday, I was start looking at it. I was like, something just it's just not fitting right. Like the the ratios just not was getting a little out of wasn't start looking good. So instead of keeping the fourth here, I moved it back here. So you're just looking at as a one, two, up and three, which is 161.8. And then from here, you have a three-wave decline toward this 38.2. And then from here, we're just looking at the extended fifth wave. Okay. So from here, you got a one, two, three, four, five. You got five completed waves in one, down two to 61.8. From here, now we're looking for this third wave, which is 161.8, 200%, which is 447. Okay, this is exactly where we at. So yesterday I put a time on it of 447, which is a 200% fib, matches the time projection. Okay, so the third wave is going to gets a little bit tricky, but you have to look at this way. It is not necessary that it's going to hit this thing. It can, it might not. Okay, so in this case right there, all we have right now is we have an extended fifth wave, which is totally normal because if you have a shorter wave one, you have a pretty good chance that you're going to have an extended fifth. If the price managed to stop somewhere here, it will come back down toward this in this fourth wave. That's how I see it for now. Okay. If I have to this is where I'm gonna leave it the way it is for now. I mean, unless if this third wave is really going to extend more on price, okay. So instead of looking at, I don't think you're gonna clear 200 that easily. I can tell you that, okay, because you can look at Bitcoin that I showed you, that 95, how many times Bitcoin came right back to that 95 area. It's going to 95, go to 100, come back to 95 again. It's just market. There's always a big chance the market is going to take, the price will take a bit of a pause around the 200, 200. It's a very strong fib if the price, because once the price is going to reach the 200 mark, I can show you any indicator. Okay, let's do this. Where's where's my I don't even use anything here. Reset. Oh boy. Where is the R? Is it the bar? Is it this one? No. Okay, I don't even use some of that stuff here. Look at this. You see the RSI right there is 87. So that's what I was gonna show you, because it's once you're gonna get to that 200 mark, your every indicator you're gonna see is gonna be overbought. So for now, if the price is really going to accelerate from here, I mean the third wave can move. I mean, but for now, for next week, I mean the price closed at where 437. So we'll just try to see if we can look for this 447 mark, and then we'll look for this some sort of a breather right there in this fourth wave, which will pair with this decline right there. And then from here, I look for one final push in wave 5 to complete 5 waves. And then you will have this one. Now, this is going to be, I don't know, next year. I don't see it happening this year. We don't have much time left. So, but for now, we're just going to leave it like this. Let's see by whatever, 16th. See if we can get to this 447 mark. And then you're going to have, then I have to see now if we do this, I don't know if where the price stops, because then we're gonna run down the fourth wave like this. Now we're gonna make our zone here in a fourth wave, okay, for this price to come back down. That will pair with this. And then whatever the fourth wave is always gonna be not gonna be easy one. And then whenever the fourth wave will complete, we'll get one final push to complete a 5 wave. And then whatever the fifth wave, that fifth has to pair with this wave one. I cannot project anything like this unless where the price has to back off. And then whatever the price is going to back off toward this area, then it has to make another higher high, because what you're looking for right now is this is the high, higher low, higher high, higher low, and you're looking for another higher high. So then from here, then I'll project the fifth wave. And the fifth wave will complete, then we'll have a completed 5 wave, and then we'll look for the retracement down toward the second wave. The second wave retracement is always typical, 23.6 and 38.2. So kind of, you see now, if you start looking at the time here, it's going to start going into the January area, next year. So there's going to be a pullback. It's this is a stock that is going to get everybody into the upside and is going to give a nasty pullback. Then at the same time is going to keep everybody to the downside in the put, and then it's going to squeeze right back up. This is a typical Tesla price action. It's always been this way, and it always will. Okay? This is a stock that always going to squeeze shorts in billions of dollars, okay, on either side. Right now, I bet you that a lot of people start betting on Tesla right now because it's completely overbought, and they're looking for this, and then it's just gonna, this is where the price just keeps, is gonna squeeze all those buyers. And then you got everybody in there now like, oh, Tesla is going, no, it has upside. If you have this kind of a 5 completed waves, and whenever you're going to settle down here in the second wave, I mean, you're looking at a third wave upside. That's going to be huge. Tesla has upside. I mean, the chart definitely looks very good now before, after taking out 3 years high. So if you have to think this way, that here you have a price, okay, that is breaking a 3 years high. And there you had the IWM, we just looked at it earlier, small cap, put a double top over there. So what do you think is going to happen? Don't you think that 3 years high of those small caps going to get taken out as well? I mean, I'm pretty positive. I think it will. The nature of the price works the same. It doesn't matter what you're trading or whatever you're looking at it. Okay, you have to understand the concept of where you have your high, how long it took for the high to be taken out, and then from there you could project the upside, which I'll do it for you. It's not a problem. So it's just a matter of that time and the perfect cute entry that you're looking for, that I hope that I got into a right time, and then now I wanted to go right back in, and that entry right there sometimes will torture you, and some of them are just gonna rip right away. So yeah, timing is very important. A timing
with shares makes it a little bit more comfortable because if you do had a bit of a weakness and stuff, but it's fine. You have time. But when it comes to the option and you're trying to play the breakout, it just becomes a little bit challenging, you know, because you wanted to, the technicals looking so damn promising that you want to take out that you're hoping for that the price to take out the highs, but at the same time the time is running, you know, and that makes it kind of frustrated sometimes. Like what the heck, you know? I mean, clear the zone. I mean, just make some room to the upside. So yeah, I don't know. You can't run any downside retracements unless you starting to see some weakness. You know, I don't know where, because the thing is this: if I run this thing from here, these numbers will change. So I cannot tell you where the high is. When the high will, whenever the price will start coming back down, then we can make the case for a fourth wave. But if the price goes up, everything will move up. So the price goes here. Look how much those all the ratio changed. And you don't do that. There's no wave counts needs daily updates. Okay, you don't just sit and attack all these sitting and updating wave count every single time, like all the time. It's not the way you do your technicals. It doesn't. That's not how it works. I mean, it's a 1 hour chart. 6.5 hours is each session. So each session is 6 bars. So how much you think you can change a wave count for 6 bars? Somebody can explain me that. So here's one. Here's a 9 o'clock right there on the bottom of the bottom of the chart. You got one, two, three, four, five, six. So from here to here was one session. These 6 bars. Just count 6 hourly bars. So if this happened, what do you can change here? You know, you don't a 1 hour chart don't need daily or second or third days updates. It will take a week or two. I mean, a 1 hour chart is a very good time frame for swing trading. You can trade almost a one full quarter of a price action on a 1 hour chart. Okay. I want to say let's say 2 months. 2 months is that's a lot of time for stock to move in either direction. I mean, here's December right there, and here is November right there. So from here to here, this is 2 months. I mean, when I haven't completed, this is month and a half. The month will the 2 months will end here. So you have this much window on a 1 hour time window to make a trade in either direction. I mean, how much time do you need for swing trading? I mean, a good like bigger companies, they don't take 2 months or a month to make a move. They'll make a move in a matter of a couple of weeks. Now, people want daily charts and weekly charts and monthly charts. Do you understand the time, like how long that time frame is and what kind of a price that the retracements and whatever it will take for price to get to that level? Months, you know? A very, very long time. And you think that the price, the market trends every single day? No, market only trends like 1 or 2 days a week. 3 days go sideways. There's only either it's going to be one day a week.
All for the rest of the 4 days, it just stays sideways. Market's gonna make a move once a week, most of the time. Just I just showed you this. Like, what was the move for this week? This. So it was 602 was the low, and I believe we gapped up on the CPI and we popped right there to 608. And the high is 609.07. We put a high here at 608.44, and the last 2 days we just backed off again. So if you make a case out of like what I'm just telling you is like, does the market move every single day? No. Just this was this Wednesday right there, open. That was a Tuesday close. That's the CPI. And then that's Thursday and Friday. That's where we ended the week, 604.21 yesterday. So Tesla works really good with fibs, but you gotta have to have a right wave count. You know, it works really good with price and time. But you just gotta. That's why I kept the four. I had a fourth here. I can still do that, like meaning that one, two, three, keeping as a one, two, and three. Like you can kind of make a case from here as a five, but to me is like you can do it as a WXY as well, just to make a fourth as a like a running flat, you know. I wouldn't this right there because when I looked at them yesterday, it looks like a three-way move, and your C wave cannot be a three-way move. You need five because C is a actionary wave, cannot be a three-way move. So I put it here and then see like if this one gets the completes the extended fifth wave, and this is exactly what it looks like. So because if I make like a bullish case that the price is one, two, three, four, and five, and you put a one here, but this thing to make a case for a second wave, it's not right. First, it's very short. Okay. It has not even the wave two is it has to at least get to 23.6% relation the retracement. That doesn't apply here either. So it didn't even get to that two. And if you look at this, making this as a wave two, and then you say like, well, if this is a doing a 1 2 1 2, I mean, yeah, this two right there then has to be better stay smaller than this. You know, it's difficult to make that kind of a case. So I would this what I have it here is fine. I'm not gonna change that. I think that's the way to go. It's just a matter of fourth wave is always gets a little bit tricky because you keep it here, you keep it here, just a matter of like, when you get the get the breakout, then just go from there. Um, what else was gonna show you? S&P. And I'm gonna be short because I gotta go um soon. Here's a chart that I posted. Okay. And S&P, some of these guys have some questions and this and that, and some of them are just looking other things. Here's a monthly wave count. Okay. This is a very long time frame. Okay. Each bar is 1 month. So just keep that thing in mind. Okay. This is S&P taken all the way back to 1950. Okay. I don't have any more data. I think there's 2 months here is just
take, it was just $16. I mean, give or take how much that thing is going to change to the upside. Not much. Take 1950. From 1950, you can take this as the 5 completed waves to the upside as a 1. So it goes from 16.68 to 109.37. That's a 5 completed waves. And from here, it took 73 months, which is 6,570 days. Okay, so I took 1950. You take this high, which is gives you 1968. Okay, so that is what, 18 years that it took to complete 5 waves. And then from here, the market had these crash right there. Okay, here's your 1970 low. Market recover right back up to the high, got a false break to the upside, and there goes your another crash right there. That's your, the 1974. So there you have your correction after completing the 5 waves, right? Remember, 5 waves, then you got the counter trend move against the trend wave. So from 109.37 down to 60.96 low, that took 24 months. It's almost 2 years. From 1968, 4 years. From 1968 to 1974, market was down, went up, came right back up, down. Then from here, from the 60.96 low, market made a push right back to the highs. Now, the typical Elliott wave that you talk about it and what you look for is what? Your golden ratio, right? For a typical third wave is what? 161.8, right there, right? So you have a wave 1, wave 2, and then you look for what? Wave 3. So the 61.8 is right here. The price went a little bit up higher to 1552 was the high. And there you got the another crash, right? Market come back down, then made another false break, and then came back down again. So now if you look at this with this, looks the same, right? A trend wave, counter trend move, a trend wave, a counter trend move. So what happens after that? You make another trend wave, right? Elliott is fractal. It's all you're looking for is what? A repeating pattern. 5 up, 3 down, 5 up, 3 down, 5 up, 3 down. It just continues the same sequence. So once it completes the 5, it makes a 1 higher degree. Then you get the counter trend. Then makes another 5 degree, to the upside. That those degrees that gets higher and higher and higher. That's what the Elliott is all about. But some of them just makes it so damn difficult that this is an expanded flat and this is this and this and this. It just keep it simple. So now you can just measure the times. The wave 1 was 73 bars, 6,570 days. Okay, that was 18 years. This was 4 years. Now you had a wave 3 that run 101 bars, 9,090, which is perfect. A wave 3 cannot be the shortest wave, right? It has to exceed more on price and time compared to the first wave. And it did. As you can see, 101 is a bigger number than 73, right? So we went to the 161.8. And then from here, the prior correction that we had for the second wave was 24 months. For 24 months. This one right there was 36 months. Okay. So this is 36 months. So from here, from the 666 low, you have to take a time relationship now of this wave 1 for this 18 years. Okay. From this low right there to project at least a minimum time relationship of 18 years. That's exactly what is happening here right now. So this is the most
simple, clear wave count that you could ever possibly can see or trade or whatever you want to do. Okay. I don't know what is, I don't know how this fifth wave is going to go. I don't know that. But what I do and what I do believe this, okay, that this market until April of 2027, okay, I'm not worried about, let's forget about the price. How high the price is gonna go and where it's gonna go. We can those that part will come through when we're gonna run our projections. If you just take the time, because the wave one has a relationship with wave five. Wave two has a relationship with wave four. These are the counter trends, wave two and wave four, that moves against the trend wave. This is a trend wave. Here's your channel. Here's your wave two. Here's your wave two. Sorry, wave four. Then you project this channel. Okay, right there. It's the same. You draw a channel from here, connect with your wave four, then you take the parallel line and just put it right on the top of this wave three. This top right there of this wave three will give you the upside projection of your wave five. That's the channeling technique that Elliott used, which people don't use it. Their fault. Learn how to use it. Elliott channel works really good. There's a very special, unique kind of technique that Elliott uses on their wave count, is to see what kind of a projection, and what, your fit projections are all there, but how the channel does all the work for you as well at the same time. So we talked about those throwovers and stuff. That happens. That's a different debate. So this chart right there that I have, that I even showed, because I have some people asking me some kind, like, do you have a bigger picture, bigger? I was like, okay, fine, I have it. I mean, it's not gonna happen tomorrow or something. This is, you're looking at huge time frame. I mean, it's a one single, um, it's, it's a monthly bar. I mean, I mean, if you just take these lows and just put all these the labeling on one side, and does it look bearish? Absolutely not. I mean, the it depends. Like, you want to go back from 2009, and from 2009, I mean, but most people, what they're doing right now is this. So oops, you want to talk about, this is what everybody is doing, like this. Market top is in. This is what you're seeing everywhere. This is not how it works. I, I even told you, and it's 18 years I've been doing technicals, and there's one damn thing that I didn't learn, is how to draw a line on a chart. Okay. That's the only thing I could not understand, and I just couldn't figure it out. How to draw a line on a chart. Because if you change, um, every time frame is going to give you a different low. So which low you wanted to consider to actually say, like, yeah, this is a broken market now? So you want to take this low? Okay. You want to take a COVID low that you can do it from like this? Let's do this. So which low you want to take? That's the question that I want to ask these guys who actually using linear charts, not even a log scale chart. Okay. I can tell the difference. Who like again, don't get me wrong, I'm not against people who try to spread negative stuff out there, whatever. But if you want to post something, it has to make sense. I can I can look at a chart and I can tell you if this is a linear chart, is a log scale chart. You should be doing your analysis on a bigger time frame on a log scale, not a linear chart, first of all. So you should learn the difference between a linear and a log scale, what it does to the price. So the point now is that you take this low, you take this low. I mean, how you want to draw your lines? Let's take these two lows. Does it look like that they were more threatening to the downside here, or we're just looking more promising to the upside here? From here, like if you take this low, which is the COVID low, to the bear market low, which is the 2022 that we had, this is the COVID low right there from B to C. This is the bear market that we have in 2022 to the October low right there. So you connect these two projected right there to the top of the top where the price failed. Look how much room do you have to the upside. The market has upside. It has more upside left. Plenty more upside left. But some people just have different way of looking at things and oh, this is the top. Market people has been calling tops in the last 2 years. How you think that is playing out? I'm not gonna be rude. I mean, I have few people here. They decided to leave and went somewhere else because I'm not selling the market. And now they came back. I'm dead serious. You want to be, I mean, the point is you trade in the direction of the trend, not against the trend. Nobody knows what the top is. I don't even know what the top is. So why would I sit here and tell the world or post on my Twitter page and like, hey, my S&P is going to 8,000. I don't do that. You lose all your credibility if you post that kind of a stuff like this. You don't know. What makes you think that you know where the market is going? I have my projections, I have my retracement. That's all I do. This is my style of trading. I don't care what the high. I will give you the target to the upside. That's the target. That's what we need to hit. You know, S&P is going to 16,000. Yeah, I would love to see it. But how many years it's gonna take? I mean, these projections, what you're looking at here is let's do this. You take this low of 1666 to this high. There would you project, and we have a 5 waves here to the wave one. There you have an ABC down in two, okay, which is to your COVID lows. Now, if you simply take distance travel here in wave one projected from your wave two, okay, your minimum upside target is 9,667. Okay, remember this wave three that you have, this degree. Okay, well, which one is this? Cycle degree, okay, has to reach at least 100% relationship, right? We all know that. Wave three cannot be the shortest wave. So if you have an extended first wave, there is going to be a very good chance that you're going to have a shorter wave five in the end. I can tell you that. Okay, I can tell you that part. When you have an extended first wave, your fifth wave is going to be shorter. It doesn't get to a 100% relationship. It only is going to reach to a 61.8. The 5 versus 1 right now, what I have, oops, this is a 5-3. It goes far out. It right. Where the heck it went? It's- Come on. You can just measure this thing. 555%. This is always longer. Yeah, we exceeded this. This is 814. And this is an extended fifth. I know for a fact because the five versus one relationship, which is the distance travel in one, which is 555%, right? You simply just measure it that way as well, which ended actually right there, you know? So a lot of people, when we started this bear market, so if you take this percentage right there from 666 low to the high of the peak of that bear market is a 622%. So the 622 compared to the wave one, which was 555, right? So it's a little bit higher, right? So you can say like, yeah, the relationship, the price, the distance travel in wave one compared to the wave five has meet the same magnitude and length, right? That's exactly where after a couple months we started a bear market. You see, the market did respond, but the most of these people were starting to look like this is the start of a market crash. But look at the channel. If you put a middle, look where the market found the bottom, and then it took off again. This is an extended fifth. I can that's for sure. But if you meet the quality and price, which was met here, okay, that's where we had this bear market in 2022. But we hasn't. But if the price has met the quality, but not the time though, you have to understand this. So this time was 73 months. This is 73 months. It'll be in April 2027, which is this 100% right time relationship fib right there. So the market has room to run. So I mean, I'm not saying that we're not going to have that we're not going to see another 5-10% dip. Yeah, but you don't see it here. You know, not on this kind of a time frame. Yeah, if I'll show you on a 1 hour time frame, yeah, this just looks like the world is coming to an end. I mean, if you look, I mean, I have this thing for a while, and if you look at this is a COVID crash right there, right there. Oh, like that was it. Look how tiny does it look? I mean, this entire run had a lot of bear market moves as well. It has 10, 15, 20% bear market runs. Like you have to go on a smaller time frame, like see 20% decline here. Okay. See 21% decline here. So but for 2, 3 months, you don't see it that much. See 15% decline here. So there's a lot of like, and then they have a bear market here, which was this 27% decline. But you don't see them for kind of like makes it like, whoa, something is like really falling apart or something. It's very tiny. Look at the size of this bear market and this crash right there of COVID crash. So as I was just gonna, so for now, and I and and I put everything right there on the up at the top is, I mean, I'm not gonna lay out this thing that like this is the top and this is what but for me, what Elliot tells me, and this is that's what I do every day. The minimum time relationship of this wave one to meet with this wave five has to be at least 100%. Okay, so we have room for the channel to move. I mean, we can dip for another month or two, whatever the case is. I mean, I'm a buyer on a weakness, as I can tell you that for sure. So we'll try to play some counter trend moves to the downside on a 1 hour chart and something that we could buy some puts or whatever, then we can do that. But I'm not positioning myself and liquidate, like close out all my entire long side and thinking like, yeah, this is the end and this is the top, like 15 years top or 20-year market top isn't that just, it's just a complete nonsense. It just really annoys me that you sitting and making these kind of a calls. Um,
Oh, can I
yes,
ask a question? Because I'm still confused. So I don't really get all those different time clips up on top corresponds to those if you have extensions. So is this April 2027? Is that the large wave five in parentheses?
it doesn't. Okay,
Minimum target there, or is it the small orange five in circle of three? Which one is it?
cycles. Okay, there are time cycles. Okay, when you look at it, a time cycle does not define any price. It's all about the time. No cycle, time cycle, I'm saying, will define a price top or the bottom. Never did, never will. The relationship of a prior move, because we don't know what the upside from here. All we're looking for is just the time to complete, not the price. Price will complete based on the price. I can only run projections because everything what I can see is here. I don't know anything what's going to happen here. It's all blank. So we just take the lows to the highest. All you're doing is just taking a higher highs and higher low swing is to project the upside. That's all it is. You're projecting upside from your largest percentage decline of the entire run that you had from 1666, which is 2009. Those are long projections. Now, when you put Elliott wave into it, Elliott is your wave one. Wave one has to be a motor wave, right? So you have a 5 completed waves in wave one. Here's your wave two, the COVID lows. So from here, when you have wave three, which is the trend wave, you need 5 smaller waves to complete a third wave. A third wave compared to a wave one, wave one cannot be the shortest wave. It has to reach at least 100% quality in the 100% relationship of wave one. The typical ideal target of wave three is always 161.8. So I'm not saying that in the next 20 years that market cannot get to 161. It can. It is already an extended fifth wave. Okay. So if you sit here and making a case that you count this as a 1, 2, 3, 4, 5, that's the one, and that's two, and this is three, and this is four. Or how can you do that? How can you have such a small third compared to your wave one? That's one. Second thing is this. Now let's say you start this as a 1, 2, 3, 4. Okay, so you'd make this as a 1, that makes a 2, that's a 3, and that's the 4. And you still counting this thing as a wave 5? That's what I'm looking at. How this thing is possible. So you want to put 1 here, 2 here, 3 here, and 4, 4 here. Okay, so if you do that, okay, so you take 1 here, this is your 1, 2, and this is your 2 correction. Okay, so now you're looking for a fifth wave. Don't you
So when did the fifth wave has ever become a three-way move? You need five waves to complete a fifth wave. This is a three-way move from the COVID lows.
Okay, so Mo, is it correct to understand that somehow, by we complete this, current cycle wave of 73 bars, which is going to end April 2027,
Just the time.
market is
Yeah.
market is going to top, and then it's going to start going down to retrace, and then maybe we're going to have another those red cycle, maybe 36 bars, and then we're going to go
No, the
101
only
orange
thing,
bars, or
if here's the thing that I want to look at. Forget about this. Let's do this. I'm gonna leave it like this. Okay. But what I wanted to see now is I wanted to see an S&P to the same distance travel in wave one projected from COVID low, get to a 100% relationship of 9,667. That will be the exact equal measured move of a wave three. I just want to this will be the upside minimum target of a wave three for now. Leave it like this for now. That will give you a time and price until April 2027. There's your channel. There's your price. That's the middle of a channel. That's where we had this low right there for the 2022. That's the bottom right there. Okay, so for now, you just measure to equal distance. 100% here, here's your 100% side by side. That's your time, that's your price. Month, 2, 3 months, we can dip down, that's fine. We're talking 2027. So we'll see what happens. That will be the minimum because wave three cannot be the shortest wave. It doesn't matter. If I move this thing up here to the top of the COVID peak, and then then the third even goes even more higher. So it disappeared. So I'll keep this thing as an expanded flat in a wave two. Gives you 9667 for now. The point is the market has room to run. This is an extended fifth wave. This is how I see it. So we're going to position ourselves again to the stock side. Again, remember my 70-30 rule, right? And we'll just hedge the downside with the counter trend, with the counter moves, but we can do some puts and things like this. So we'll play both sides. But I'm not just gonna sit and fight the top like everybody else is doing. That's not how I do things. So
so Mo, how does this April 2027 correspond to QQQ's your market top cycle projection of October 2027? It doesn't seem that the S&P 500 peaks before QQQ. Usually QQQ peaks before S&P 500.
yeah, but it could correct, as I said. I mean, these are monthly bars. A monthly bars can the market can have 5, 10, 15% dip from here. I mean, here, like if you go down to a smaller time frame, I mean, there's your 1 hour, like 5% dip is right around, it's not that much, but you don't see much on a bigger time frame. Here's your 5% dip up to what, 57-ish kind of area right there. So from current price to this low is 5.91% to 56.96. I mean, that could take several weeks. I mean,
I hope that we could take some bit of a breather. I mean, some of the stocks that we could buy for next year. But I mean, market is strong. I mean, you gotta just now the thing is this that we just looked at those values and IWM and because you know they're not gonna stay down, right? If that rotation and that 8 years of the sell off the Dow has been down for 8 days, that thing is gonna push right back up. What do you think is gonna do to the S&P? You see how value and growth is working? Mega growth goes up, so does the S&P. Now value the Dow is down for 8 straight days. That is gonna move, so does the S&P. So S&P is always getting that upside momentum going all either side. But market is rotating around into the year end. So it's a little bit confusing. I know there's a lot of things that I look at and you guys probably looking at some different way. You guys more focus on stocks. I analyze the whole overall market every single day. So that's different. I look at pretty much everything. Your attention is like, oh, Meta pop or Google pop and Tesla is moving. And you just your eyes are all on those individual moves that's happening right as soon as the bell, that the bell rings. When you start getting into those sectors and analyze the overall market, that just gives you a totally different picture. You know, it's just we just went through it. I just showed you everything. I mean, you see the difference right there. Yeah, I mean, Mag 7 is gonna perform really good. You got an upswing right there. You got everything rallying here to the upside. And the question is like if this mega growth is gonna take a bit of a pause, which it will at some point. So it does this one continues or this one goes the other, to the other side. You see it's totally opposite. It's the same exact thing. We just looked at the rotation. Value is down, mega growth is up. So if you look at the sectors here, sectors are look what all these sectors are doing. Look at energy, financials, industrial, utilities, materials, real estate, healthcare. Everything is pushing down toward the lagging quadrant. And look at all three: XLY, XLC, XLK, all going toward the leading quadrant. You see how mixed this market is? So a lot of these moves right there that we're looking at is almost happened, because here's your XLK, all these stocks at communication. Here's your Netflix, Google, and Meta. Here's your XLY, Amazon and Tesla, Costco. These are the big ones, BKNG. But look at all these ones. So you have 11 sectors. 9 of them are this going here on this side. Only 3 of them are heading toward the leading quadrant. So all the momentum is right there on these 3 sectors. The rest of them are all puking right there every single day. So what do you think that this is gonna happen from here? So let's wait. I'm looking, and you gotta be patient with me. I can't just throw trades left and right because I'm a little hesitate as well. Like if I'm gonna throw like 5, 6 trades, sorry, if I put 5, 6 trades there, what if market pulls back? I'm gonna get hurt. I gotta have to lay it out, you know, just continues slowly. I can just put positions on. I'm gonna put more. So just I'm working on it. It takes time. And then from there I can just, and then we can build several positions for next year. So late, what is today? What we picked? What was the latest one? Boeing did good for us, right? Broadcom did good. What was the other one? UPS is kind of flat. Look at this move. Hey. um, oops. I know the stock split. I told you that I hate it. Um, here's the deal on this. So that was the entry on Broadcom, and this is this is the cup and handle pattern. That's well, I had them that way, and then I had the same way with the I did as a 1-2. You got a leading diagonal up in one, down in two. That came right to the 50% retracement. The 50% retracement for typical for wave two is very typical, and for the cup and handle, that's where usually the handle, norm like will end up finding support near the 50% retracement anyways with the cup. And then you take the measured move of this cup to this is 100% relationship is 228. And the price yesterday high was 228.70. So talk about the top, huh? So we got in at 162.36 and we got this rallied. And this is where we got the breakout. And then we just retested this thing. That's what I was watching because when I noticed that we got this breakout, right? You see this huge pop, and it was really good because I like to see when price breaks out and comes right back down to retest it. That confirms that this breakout is legit, kind of like real, because there's a lot of kind of if you had a breakout, I gotta go because I'm gonna make it pretty fast because if the price breaks and it closes right back down here like this is called a fake. Like, it's also a false break. So, so the whatever the channel or wedge that you want to break. So the price got the breakout here, couldn't hold it. 2-3 hours later, and and then meaning that the intraday close was inside the channel again. That considers a false break. Okay. So when you have a price that gets a breakout, retest it, then takes off. That's what you want. So you always gotta be. I was watching. I was like, I have 5 waves here. And I said like this wave two that is coming down here, I said like it should find support here in this zone. It's just where you have this support right there. I said like we should price rally back up. So there you go. We got another gap up. You see the gap right there? I was like, this has gotta go. This is ready. I was pretty kind of confident that it should be okay. Price looks good, strong company, and I kind of hesitated first. I was like, I don't know, Sammy's overall not doing that great. Should I close it? Should I take a risk? I was like, screw it, whatever. I mean, if I'm wrong, if this thing comes back down, I was like, I'm gonna buy more. This is a company that you want to buy, you want to own. Anyway,
So
so
target the buyback 214.
if it took a pause here, the third, which is well, the equal distance measure move of 100 is done. Okay. Now the question is that if this third wave extends to this, that's another point. So right now, this third wave is
वो
right
चली जा
there
रहा है
to
रिकॉर्ड एक
this
बार नहीं था hold on let me make sure I'm
is to this 200%. Okay. So the 200% relation, the FIB projection was 223. The 100% of the measured move is this. So this is a zone. That's where the price is at. And it closed yesterday at 225. Okay. So from here, now if the third wave is going to accelerate, it's going to go up to this mark, 242 to 244 to 243. This is how if the third is going to extend. If it stops here,
and then I could run downside, but I cannot do anything but have to wait for it when the price wait to where the fourth is going to come into here, this zone. So there's your fourth wave. The minimum downside if the price stops here will be 214.84. That will be the 100% relationship with wave two. Then we have 23.6, which is a 213. It's a 213 and 214 is almost there. And then the 38.2 is a 204. And then from here, and we just look for one final push toward this fifth wave to complete this third. Or this actual third, like if you take this first wave projected from 2, your third one is sitting at 287. This is the 3 versus 1 relationship. So third can move. I mean, but for now, I'm not going to go that far yet. I'm just going to focus on 100% relationship, which we met yesterday. So that is good right there. So we'll see what happens. I mean, you can leave it like this. So that's your third, 200. That's 261. That's 100, 261. So you have this zone and you have this zone if the price continues to the upside. If the price trying to back off from here, we can run the fourth wave from here. If the price gets the furthermore continuation toward the 261.8, and then we'll just move the third up and then we'll run the fourth down from there. Okay, so either or. So this is a zone that you have. You have 223, 220, 228, 242-ish kind of area right there. Okay. So we'll give some time. Boeing did good. Boeing had a very nice. A lot of people are turning bullish on Boeing. Really nice move. It's coming to an end. It's 5 waves on Boeing. Okay, because I gotta go. It's coming to an end. Boeing has 200 EMA sitting at 170. The yesterday high was 170.43. Okay, as you can see right there. I mean, it's gonna be a pretty strong resistance. 200 EM, 200. You're gonna crack that one. Yeah, stock goes bearish, and 200 is a very strong moving average. So it kind of poked right to the mark, and is right there. It actually managed to hold right up there up on the top. If I have to make a case from this 137 low, here you have a 5 wave up, 3 down, completed 5, beautiful move. Here's your fourth wave, and there you got the fifth wave. So we're pretty much rolled the whole thing up basically from here. From our entry was 144, and I mean, we can do a channel here. You see this 3-4 is this. There's some resistance here for Boeing. So you have a channel resistance, but then you have this fib sitting here for the 5 wave completed move. Any dip on Boeing, consider buying for next year. It's well worth it. It's a beautiful, clean 5-way move. It's just this counter trend. I know it's gonna come. This zone right there, this area, that would be a nice entry for Boeing because they're. I mean, we'll look for third wave up. Oh. I don't know where the top is, buddy. I can run all these downside attempts. I cannot project anything down to the downside unless we don't know where the top is because this can change. I don't want to give you any kind of false information, leaving like this, and then you putting your money into it. That's not how it works. Okay, you need to see some sort of a weakness to make a case for a second wave. You can't assume this is the completed 5 and now we are gonna have 2. No, that's not how technicals work. What if this thing goes? You see how the number moves? Look,
What if this fifth extends? It's totally possible, right? Nobody knows that. What if it goes here? Look how much the downside retracement changes right away. And you don't know where this thing is going to end. You never ever assume is this is completed and now I can expect a second wave. No, I will show you, and when we will see signs for it. You don't just assume things. You pay attention to the actual price, what exactly the price is telling you. Then you look for this. I'll add more. Okay. So when I will add, you will add. So yeah, I didn't close the whole position yet. Just gotta, you never know. I mean, if this is this is the wave count that I have on. See, I gotta change those time frame. That's why it changes everything. See, the the smaller wave, they all disappeared now because I just went to the bigger time frame. So the bigger is this is a pretty well-defined contracting triangle on Boeing, and you have an A, you have a B, you have a C, up in D, and up in D, and here's your E. I mean, this you have triangle that only forms in wave 4, and after wave 4, you're gonna have a larger wave 5. That could take several years to play out. But for now, the minimum upside target that always going to be, because we still need to get out of that triangle first in order to open up the upside. So we still got a lot of time to go because we're still within this triangle. You have to look at it this way. You have to get out of this triangle once you're going to take out the D wave high. That will give you the confirmation that triangle was completed. Okay, you never know. This thing can still stay sideways. These triangles are nasty, especially on a bigger time frame. This could be down here. Consider this as a A1, that's U2. That's, it can go in like this as well. Like this. It's totally possible. Yeah, they last forever. You don't know your when the triangle will complete. Your confirmation for a triangulation for triangulation to complete is to take out this D, and by that time you gotta have to have at least 8 swings like this shape. That's who's gonna push this thing like that's your third wave. So you have 5 waves up, 3 down, and then you need to take out this high right there, and that high is going to get most of the time it takes out by a third wave because that's the powerful wave. It's the strongest one that you're looking for the breakout. That will confirm your triangle. So we've got a long way to go. And no one expects everything's going to happen pretty quick. But for now, I'm just going to target this 200 area, which is this prior B wave. And let's see, and then we'll see if we can back off from here. Whatever happens from here, we still need to complete five waves to make this one first. So if this is one that I just showed you on 1 hour. This okay. This is the 1 hour chart on a 1 hour, but you don't see much on a daily time frame yet. But we have to make 1, 2, 3, 4, 5 to make one higher degree of 1. Then you come back down in 2. Then you take that third wave to the upside. So we got a long way to go. Okay, so don't expect that thing is going to happen 2-3 months. It's a cheap stock. It's not that expensive. You can easily buy shares as well. Just write them up. We're gonna always add more leaps and stuff. So from this 1, 2, we have 5. That's good. Now we need 2 here, right? And then we need the 3rd, 4th, 5th to complete their orange 1. So we got a lot of time.
Okay, I wish I'm gonna cover you more because I gotta go now. I gotta go pick up that car. Um, we'll leave it here. Rest, I will send you the um, I think the log sheet.
Nice,
Huh?
nice short session.
Yeah, because I gotta go pick up that lease. Our lease was up. Um, and then I gotta go to the Lexus store, pick
Good.
up.
I can go to shopping too then.
There you go. Yeah. There's not, I mean, market is kind of choppy. I mean, here we're trading, but I'm just I'm just not really um looking at this. And then you have Dow is just 8 straight days of decline. I mean, it's just crazy. I mean, it just I mean, somebody was asking about ARM yesterday. Like, I don't trade these names. I mean, I know some of you guys are looking at everything. It kind of looks like a bit of a triangle. Um, I don't have a wave count. I still gotta make that, but you can watch this. Okay, kind of looks like that it's kind of ready to pop. Um, you can just do this. It's A, B, C, so whatever. I don't know if it's a triangle or whatever. It's starting to squeeze. I mean, look for 164.16 of this high. If you is P7, there's a very high swing count, but the weekly is not good. The weekly is still in a second swing. It's kind of don't have a very good and if you even look at the monthly is kind of sideways. I mean, it could have potential. I don't know. I don't know nothing about this company, to be honest. I never looked into it. Yeah, you can make a case for this, you know. And look for one if you are tracking this, um, got a go signal here. That's the one I don't have. Look for 164.16. If you can against 135. So do this way. I'm going to show you a quick way. Draw this one and watch this zone. This. Okay, so 135, 144. Watch this to see if you get the higher swing. The swing direction is up. Okay, which is a good sign. On top of it, you got this little go button here as well. So that one is telling you ready to go as well. But you just need to take out this 164. If this thing it is right there to this resistance right there. Okay, to this high right there. You see where the swing change directions. So there's your initial swing. That's your down. That's your low right there. That's your lower high, lower low, right? And now it's trying to see. I mean, it's actually looking. It might get a crack out of it to the upside. Here, you can do this. That's your that's your neckline right there. You can do that. I can show you a price 10 different ways. If you're looking at, I mean, if you, I don't trade this to be honest. You guys know what I trade. I know some of the guys want to trade every single thing that moves, but you will learn. Um, if you're looking at this is the daily chart. Um, look at as a consider these two. See if you can try to squeeze inverted head and shoulder pattern from this 164 to see if you can take out 157 to 164. If you take out this zone, it could open the upside. If we break that, then tell me. I will tell you what the upside would look like. Okay.
So,
Okay.
Mo, anyway, before you go, to recap for the rest of the month, I think that, as your S&P 500 seasonality for December shows, middle of the month is like a bottom, and
Mhm.
then, it's consolidating, and then there is a GAN major calendar day, December 20th, coming up, and Santa Claus is already coming up. So isn't it the middle of month dip is a great chance to buy?
Everybody's hoping and have their finger crossed on Santa Rally. Okay, if you take this, today is the 14th, which is right around here we are now. So this is the time that we went so far. This is coming. So if you look at a seasonality from here to here, it's looking pretty damn promising. Okay.
Yeah.
So how does this gonna come into a play? We're gonna find out. So that's the seasonality right there. We're almost flat for the month. Okay.
I think there's a little profit taking, going for at end of the month. And then, all the money
Yeah.
managers are preparing for the next year. So they have to lock in the profit. And then they're gonna buy back again for the next year.
Yeah, we'll see. We're tracking it. We're gonna buy some. Yeah, I gotta go and get the car because her lease was up. Then just gotta get a different car.
Great, go get your new car. Which one
It's
are
a
you getting?
fifth NX. Shit, that's her. God, what's that? Fifth Lexus.
Nice.
Yeah, NX, the 350, the 2025 white one. All cars white. I mean, just I don't know. She's probably out there probably listening.
Yeah,
Like she
white car
don't
sells
change.
best.
Yeah, she doesn't change
White,
any other color. She don't get any other thing
yeah,
beside
white
white.
car is the best car to buy to
Yeah.
retain the value of the car.
Yeah, that was she had what, three RXs, RX 350s. Then she's like, well, then my little one started go up, what is that, 8 years. She's like, I don't want that big of a car. I was like, okay. So then I got the NX. Now that NX is done, now it's just like, okay, do you want to go back to the RX or the NX? And then I'll do another NX. We're like, okay. That's our fifth Lexus in the last like what, 10, 12 years. So I'm gonna just go there and get that one. And that's it. Yeah, run this one for 3 years and I'll get another one. That's all. Maintenance free and always for business is an advantage as well because it's a lease. I can write off the lease as well. So it works. Okay, I gotta go. Thank you,
Thank you,
everyone. Go
Mo.
enjoy your day, and rest we will cover and try to help each other on main chat. See if you can. Some of you guys has been here for a while, and some new guys are coming in. They might have some questions and stuff. So sometimes I'm in the middle of something, cannot reply them back. Let's try to help each other out, okay? I appreciate it. Just to see some have where to look for, what to do, this and that. Just to kind of like guide them through. In a couple days, they will know exactly like what we're looking at and what we do, what we do all day. Yeah, just new ones are always going to be all fully hyped up. Hey, give me this, give me this, give me that. Like, just slow down a little bit. And now I just jump on the market right away. We'll trade, but doesn't mean I'm gonna trade every single day. So, okay, I gotta go. Thank you. Enjoy your day.
Thank you.
Thank you.
Thank you.
You're welcome.